Juris Vodcast with Scott Pearce.
The global banking system is in desperately bad shape. The collapse of Lehman Brothers was extremely disruptive. Now none of the Western governments are willing to see another big bank fail. These governments argue that the banks aren't lending money because businesses have become risk-averse and because consumers have lost confidence. They are trying to increase confidence and risk-taking by flooding the banks with immense oceans of public cash. In simple terms, the governments are trying to socialize risk to support private profits. Both the incoming Obama administration and some of its European counterparts are planning to remove bad assets from banks' balance sheets. They say this will free up lending because the banks will be adequately capitalized. There are two problems with this approach. First, it's going to be incredibly expensive. Second, nobody knows whether or not it's going to work. We've already seen what happens when a government insures a private bank against large future losses, because that's what the U.S. has done with Citigroup and Bank of America. The result has been ugly. Why should we expect a different result when the government intervenes to buy toxic assets? There's no justification for bailing out these banks. Why reward failed managers? The Irish government just nationalized Anglo-Irish Bank, about 4 months after it guaranteed the bank's loans and deposits. It would be better to nationalize our system and dramatically restructure the Federal Reserve along the lines drawn up in the American Monetary Act. The bailout should go to borrowers, not corrupt lenders. Putting money into the hands of regular folks is the only way to restart a consumer-driven economy.
Juris Vodcast is a production of Nuclear Podcasting. Creative Commons Attribution Non-Commercial No Derivatives.